You are listening to The Vocal Technologist. Spoken tech for your ears.
Okay, let's unpack this. Today, we're exploring that really fast-moving space where traditional finance and the digital world collide.
Exactly. We're looking at some recent developments, trying to connect the dots for you on things like tokenized assets, new banks, even stablecoins.
Our aim is really just to help you make sense of what's important, maybe offer some fresh angles on it all.
Yeah, cut through some of the noise.
So, kicking things off, Robinhood, they've introduced these things called stock tokens.
Right. For big private names like OpenAI, SpaceX.
But here's the thing, their CEO, Vlad Tenev, he confirmed they're like blockchain-based derivatives. They're not actual equity in the company.
Which is a crucial distinction.
And apparently OpenAI wasn't thrilled. They even objected to it.
Yeah, that's pretty telling. And, it immediately sparked this whole tokenization or deregulation discussion.
Ah, okay. Tell me more about that.
Well, someone like Matt Levine argues it kind of blurs the lines, doesn't it, between public and private companies. You're sort of getting around the usual disclosure rules.
By using tokens instead of traditional shares.
Exactly. But then Tenev pushes back. He says, look, it doesn't make sense to block regular investors from private equity, but let them gamble on super risky zero-day options.
Those really short-term bets.
Yeah. So it's this tension, right, between opening up access and making sure people are protected.
Interesting. So while those lines blur, are we seeing completely new financial structures pop up?
We definitely are. Take Erebor, for example, this new digital-only bank.
Launched by Palmer Luckey from Endural and Joe Lonsdale, Palantir co-founder, right?
That's the one. They're explicitly trying to fill that gap left by Silicon Valley Bank.
Focusing on tech, AI, crypto, defense, sectors may be feeling underserved now.
And their stated goal is pretty bold. Become the most regulated entity dealing with stablecoin transactions, aiming for legitimacy right out of the gate.
Okay, and what else is happening on the infrastructure front?
Well, there's also virtuals. They've just launched their Agentic Commerce Protocol, the ACP, in beta.
Agentic commerce. What does that mean in practice?
Think of it like different AI agents being able to talk to each other and use each other's tools.
Ah, so one AI finds the flight, another books the hotel.
Exactly. Working together automatically to complete a task for you. It's sort of a glimpse into how AI might handle transactions down the line. Pretty fascinating stuff.
Definitely. Okay, so we have new infrastructure. How are people actually using crypto for finance right now? Any specific strategies?
Yeah, absolutely. We're seeing these USDC out strategies gain traction.
So using the USDC stablecoin, how does that work?
Basically, you pool USDC and lend it out across different DeFi protocols to get a yield. Summer Finance's Lazy Summer, for instance, offers about 7.4%.
That's a yield.
Or you might look at Euler's frontier markets, pushing maybe 12% to 14%. And the key is you get your USDC back when you exit, you maintain that liquidity.
Right, and that ties into Euler V2.
It does. Euler V2 brought in this modular vault setup and Euler swap. The idea is to put idle crypto assets to work, really boost capital efficiency.
And it seems to be working. Their TVL jumped significantly.
Hugely. Nearly $2 billion in total value locked. But, and this is important, Euler's got tough competition.
And they had that big exploit in 2023.
Precisely. So rebuilding trust is absolutely critical for them to keep growing. It's not just about the tech.
Good point. Okay, broadening out a bit, what about wider risks?
Well, analysts at Franklin Templeton pointed out this potential dangerous feedback loop.
Okay, how does that work?
Imagine crypto prices fall. Firms holding crypto treasuries might be forced to sell assets to cover things.
Which then pushes prices down even further.
Exactly. It hits both the token price and maybe even their own stock price if they're public. So maintaining that NAV premium, their assets being worth more than liabilities, is vital. It shows a potential weakness.
That makes sense. Now, here's something I found really thought-provoking. This idea from Quid Pro stablecoin.
Ah, yes, the argument about why the U.S. government might really be interested in stablecoins.
Right. The suggestion is it's maybe less about ideology, DeFi, freedom, and more about needing to fund national debt.
Explain that connection.
The idea is that certain mechanisms, like this proposed Genius Act, could essentially unlock trillions in treasury buying power through stablecoins.
So stablecoins become a kind of state-approved way to inject liquidity and soak up government debt.
That's the argument being made. It reframes the whole stablecoin regulation discussion, doesn't it? Puts a very pragmatic, almost cynical spin on it. We're just reporting on that perspective, of course.
It's certainly a different take than you usually hear.
Okay, let's wrap with a few quick hits from the crypto world.
Go for it.
Amino Bank, which is regulated in Switzerland, is the first bank globally to back Ripple's new stablecoin, RLUSD.
Interesting. And speaking of stablecoins, Ethereum's total stablecoin supply just hit a new record over $135 billion. Shows continued demand.
And a couple of slightly stranger ones. North Korean IT workers apparently got into hundreds of remote jobs getting paid in crypto.
Wow. Okay.
And finally, if you're trading on-chain, the data suggests the peak activity time is between 3 p.m. and 9 p.m. UTC. Just a little tidbit.
Good to know for the traders out there.
So, yeah, from tricky token definitions to stablecoins maybe propping up national debt, it's a really dynamic picture.
It absolutely is. What's fascinating is just how much digital finance is pushing boundaries, making us question basic ideas about ownership, rules, even economic policy itself.
So the question for you listening is, what really stands out to you as these digital and traditional worlds mix more and more? How much do you think our idea of money or owning something will actually change in the next few years?
You've been listening to The Vocal Technologist. Tune in next time.